We are starting today's deep dive with a piece of news that just ripped through both the cryptocurrency and the traditional finance worlds.
Oh, absolutely.
It's an inflection point I don't think very many people saw coming quite this quickly.
No, not at all.
The New York Stock Exchange, the NYSE, has officially granted approval for two of the most recognizable altcoins out there.
And two of the most unique, I'd say.
For sure. Dogecoin and XRP, they're launching as fully tradable, exchange-traded funds, ETFs.
It's a phenomenal headline, really, and it signals a true paradigm shift. Bitcoin and Ethereum, they paved the way.
Right, they cracked the door open.
They did. But approving these two specific assets, DOGE, the ultimate meme coin, and XRP, the payments giant, that confirms the whole idea of an altcoin ETF is. It's not a niche thing anymore.
It's mainstream.
It's a standard financial product now. This is the kind of institutional stamp of approval that, until very recently was really just for the biggest of the big crypto assets.
Exactly. So our mission here is to do a deep dive into the source material on these Grayscale launches. For the Dogecoin and the XRP ETFs, we need to understand not just what was approved, but maybe more importantly, how the regulator managed to bypass that standard, months-long process.
And what it all signals, right, for the next wave of institutional money.
That's it. What does this mean for money flowing into the digital asset market?
Yeah, we're watching the legitimization of, really diverse decentralized assets, and it's happening on the floor of the world's largest stock exchange. It's pretty wild.
Yep.
And it involves some complex regulatory moves.
That's where we need to start.
Yep, let's do it.
Okay, so let's unpack the mechanics right away, because the speed of these approvals, it stunned a lot of people.
It really did.
Usually getting an ETF approved, especially for, a non-Bitcoin asset, it takes months, sometimes years of back and forth with the SEC.
The dreaded review loop.
Exactly.
Yeah.
How did Grayscale and the NYSE just seemingly dodge that?
It really comes down to two key things. First, they're leveraging existing structures, these trusts. And second, they used a very specific expedited regulatory pathway.
Okay, let's talk about the regulatory side first.
So the mechanism they used was NYSE Arca's official certification filing. They officially approved the listing and registration for both the Grayscale XRP Trust ETF shares and the Dogecoin Trust ETF shares.
And this is where the deep dive really pays off, because the specific act they cited is a huge deal.
It absolutely is. The approval documents, they confirm both were greenlit under the Exchange Act of 1934.
The Foundational Act.
The Foundational Act. It regulates securities exchanges, ensures fair trading. So listing under this act gives them a standard structure, basically just like any other stock.
But again, the speed is the thing.
Yeah.
How do you fast track a meme coin ETF?
That's the fascinating technical part. The source material points out that it avoided the whole long SEC review because they used a new streamlined process for these certification filings.
A new process.
Yeah, and ironically, it was a procedural rule change that was put in place during a recent period of government uncertainty.
Wait, you mean during a government shutdown?
Specifically, yeah, when the standard agency review processes were all disrupted.
So are you saying the NYSE used a technical loophole created by, congressional budget drama to push through altcoin ETFs?
It sounds a little like that, doesn't it?
It sounds less like a seal of legitimacy and more like they exploited a shortcut.
Well, it's not quite a loophole. It's more like they were leveraging an existing expedited procedural path. It means the NYSE basically certified that the assets met all the listing requirements themselves.
For transparency, liquidity surveillance, all that.
All of that under the 1934 Act. And under those specific rules, the SEC they didn't need to do the multi-month, often adversarial comment and denial process we saw with the first Bitcoin ETFs.
Okay, so that makes it sound more procedural. It's not necessarily a full-throated endorsement of the underlying assets themselves.
Precisely. It's a procedural victory. And that victory allows for the conversion of what was already there, which is the second key mechanism here.
Right.
These are not new funds being built from scratch. They are converting from Grayscale's existing massive private trusts.
Let's elaborate on that, because for anyone listening who invests, this is the most critical technical detail. What does converting a private trust to an ETF actually do?
It unlocks a ton of value. It fundamentally changes the investment landscape for that coin. Grayscale's private trusts, like GBTC for Bitcoin, they traditionally trade over the counter.
They often have that huge discount or sometimes a premium to the actual value of the crypto they hold, the NAV.
Exactly, the famous NAV discount problem. So investors are often sitting on trapped capital, or they're holding shares worth less than the actual assets.
Right.
Converting to an ETF completely eliminates this problem. It lets these sophisticated players, they're called authorized participants or APs, to come in.
And they do the arbitrage.
They do the arbitrage. If the ETF shares trade too high or too low compared to the crypto price, the APs can create or redeem shares immediately. This ensures the ETF price always tracks the spot price of DOGE or XRP.
So it guarantees liquidity and gets rid of that discount premium mess.
It's a massive, massive upgrade for investors.
Okay, so this is where it gets really fascinating for me. We're talking about two completely different assets being legitimized at the same time.
A total study in contrast.
You have Dogecoin, the meme king, and then you have XRP, the enterprise payments giant. Let's dig into what this means for the specific trajectory of each one.
Yeah, it really highlights the different ways institutions are starting to look at crypto. Let's start with Dogecoin. This approval basically confirms that the institutional market is finally ready to admit that, cultural and community strength is a form of utility in itself.
Now, we should be clear. This isn't the very first DOGE ETF, is it? We've seen some smaller tries.
You're right. Good point. The sources do note this is the second major attempt. There was a smaller fund from REX and Osprey.
But the difference here is Grayscale.
The difference is scale and credibility. REX and Osprey, they're niche players. Grayscale is, they're the institutional bridge. They converted the multi-billion-dollar Bitcoin trust. The Grayscale name brings instant legitimacy and scale that those earlier funds just couldn't get. They often struggled with low liquidity.
So why DOGE? What's the core driver the sources are pointing to, beyond just being the first ever meme coin?
It's purely cultural momentum. It's fueled by what the sources call its unparalleled community strength. And this is critical, the influence of these huge public figures.
You mean the Elon Musk effect?
We are talking explicitly about the Elon Musk effect, the ability of one single influential voice to just shift the entire perception and price of an asset. The ETF legitimizes that cultural factor. It's basically saying, okay, traditional finance now has a compliant product to sell to this incredibly powerful retail movement that's been driving DOGE for years.
The idea, though, that a traditional financial advisor can now put a literal meme coin into someone's retirement portfolio it's staggering. Doesn't that kind of diminish the seriousness of the whole thing?
It definitely raises that question, but institutional investors, they're driven by demand and compliance. If there's a huge, super active retail base, which DOGE absolutely has, and a compliant structure shows up,
institutions will follow the money.
They will follow the money. So the impact of the ETF is clear. It opens up DOGE to all those places it could never go before. Advisory platforms, retirement accounts, major brokerages. For the first time, DOGE isn't just a joke, it's a compliant financial instrument.
Okay, let's pivot completely. XRP. This coin has always been about utility, right? Cross-border payments. It just came through years of really tough regulatory battles. How is this Grayscale ETF approval different for them?
The XRP story is all about capitalizing on that hard-won regulatory certainty and its established utility. XRP is the #4 largest crypto globally. It's known for its tech that supports huge global payments use cases.
So its pitch is totally different from DOGE. It's utility and speed, not community hype.
Exactly. And similar to DOGE, we should note there are already some smaller XRP ETFs out there. Canary's Fund, for instance.
Right. But again, Grayscale comes in and just amplifies everything.
Everything. This approval means we have multiple regulated options now, giving U.S. investors that exposure after its legal status got cleared up. And the Grayscale conversion means you get instant scale, institutional marketing, integration into the big platforms right from day one. For XRP, this is about maximizing access to a utility that institutions already get.
So we step back for a second and connect these two very different stories, the community meme coin and the established utility token. What are the big signals this sends to you, our listener, about where the market is headed?
This is the connective tissue, right? There are 4 major insights here that really show the direction of institutional crypto.
Let's walk through them. Signal number 1 is about the asset class itself.
Signal 1. Altcoin ETFs are now the undisputed standard. That cascade effect is complete. Bitcoin created the blueprint.
Ethereum solidified it.
And now the wider basket of alts is just pouring through. The sources confirm Grayscale is systematically targeting a whole range of coins. Solana, Litecoin, HBAR, and now, obviously, XRP and Dogecoin. The story is way beyond just the big two now.
And signal number 2 is about the venue itself, the NYSE.
Absolutely.
Yep.
Signal 2. The NYSE is embracing crypto assets at a scale that just screams maturity. I mean, it's easy to forget we're talking about the world's largest, most established stock exchange.
Yeah.
For them to list altcoins, and specifically a culturally driven meme asset, is a profound statement. It signals that the traditional gatekeepers have moved past just speculation. They are actively integrating these assets into the fabric of global finance.
And what's driving that integration from the NYSE's side? Is it just trying to get market share?
Well, that leads right into the third signal. Retail and institutional demand is just too strong to ignore anymore. The sources are really clear on this. DOGE and XRP have two of the most active, most engaged retail investor bases in all of crypto. So the institutions aren't creating the interest here, they are responding to it. They're providing a compliant, regulated product that meets a really powerful existing demand.
So it's the regulated venues following the customers.
It's a sign of a maturing market. And then finally, the fourth signal is about Grayscale's strategy.
Their bigger plan.
Exactly. Signal 4. Grayscale's conversion blitz confirms its long-term ambition. They are aggressively converting every single viable private trust they have. This shows their deep commitment to dominating that institutional bridge. They're expanding ETF coverage. It's not just a reaction. It's a proactive strategy to become the institutional access point for the entire spectrum of digital assets.
That systematic conversion really is a tectonic shift. So, okay, let's get practical. These ETFs start trading Monday morning, right at the opening bell. Given the hype, the institutional scale, what should we expect to see immediately?
First thing, expect extreme high volume and major volatility, especially in the first, say, 72 hours.
Wow.
We should definitely expect strong inflows right away. The fan bases for both DOGE and XRP are, they're highly motivated. They've been waiting for a regulated vehicle like this.
But how is that volatility managed? I mean, if the price just spikes like crazy, doesn't that destabilize the whole point of the ETF, which is to track the spot price?
But that's where the mechanics we talked about earlier become so critical.
The authorized participants.
The APs, they manage the volatility. If huge demand drives the ETF share price, let's say, way above the spot price of DOGE, the APs immediately step in. They create new shares by buying the underlying DOGE, and then they sell the ETF shares, which brings the price right back in line.
So that arbitrage mechanism contains the chaos.
It contains the volatility, yeah. It's totally different from the old disconnected trust structure. So high volume is pretty much a guarantee, but the structure itself is built to handle that demand shock. And, let's put this in the current market context. The overall crypto market has been cooling off a bit lately, right? A little bit of a pullback. The launch of two such high-profile, diverse ETFs, one driven by retail passion and one by enterprise utility, that could act as a major catalyst. These launches are big enough to potentially spark renewed buying interest, and maybe lift the entire asset class, not just these two tokens.
It's a massive shift. The core takeaway isn't just that two tokens got an ETF. It's that the largest stock exchange in the U.S. has formally legitimized assets, driven by both pure cultural momentum and specific regulated utility. It's proof that altcoins have really, truly reached institutional acceptance. It changes the whole conversation around what value even means in decentralized finance.
And that raises this profound question, one that I think summarizes this whole collision of finance and culture we've been talking about.
Oh, what?
When the world's most iconic stock exchange is trading a meme coin like Dogecoin right next to blue chip stocks, what does that really say about the nature of financial legitimacy today? And it makes you wonder, what unconventional asset, driven not by traditional metrics, but by community or by culture, what stands out to you as the next one that might just inevitably demand its own fully regulated ETF?